Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, everyone, we're about an hour after market close on Wednesday, August 18th. We're going to take our daily look at SoFi. SoFi having a little bit of a reprieve today, which you can see here, up almost 3.5%. Volume coming in at a little over 20 million, so relatively solid on the volume front. And I say it's a brief reprieve. Obviously, you see back here on the 12th, we were still in the 17s, and so being that now we are having great green days that are fixing us in the $14 range is, just keep that in perspective. As we had mentioned in some previous, green days, I won't even call them runs, but if you recall back when we had like this day nearly 10%, I made that video and had talked about be cautious about getting overly exuberant about this one big green day. We've had a lot of pain and we could certainly continue to pull back. And I would stress that again this time around. I don't care if you call me a bear in the comments. I don't care what anyone calls me in the comments. So do whatever you want. It's no skin off my back. But, this is just to say this is at this point, if you look on this daily chart, these green days are mere blips on the overall portrait of an otherwise red landscape that SoFi has been since way back here, basically, late June, mid to late June and forward. So I would just say, be cautious. On the daily here, we still are dealing with a bearish crossover. Now, it did taper a little bit today in terms of how aggressive of a crossover it was, so that it, could be potentially peeling that back a little bit so that it doesn't move so aggressively down. Now, if we can stitch together a few green days, then maybe it flattens that out and it at least gets into a pattern where it's sort of laying on top of itself and it's not fully bullish nor bearish, and maybe that results in a future bullish crossover again, which, as I've been saying, it took us so long to effectuate this bullish crossover. So who knows if or when the next one's coming, but this is, again, just to say, be cautious with how overly leveraged you get on just one green day. That, again, also keep in mind, yesterday we went down 3.78%. So even the green day today was not greater than the red day yesterday, and certainly not of the days before that. So still a long ways to go if we are actually going to make anything that looks like a return to some green days and some upward momentum. The 20 is still structured quite a bit above the price actions. That will likely add some additional resistance if and when the price action gets there. The degree to which these 50 and 20 could start moving toward each other, that will help quite a bit, because that could be an additional buoying factor if we can establish above the 20, and then if that can have a bullish crossover above the 50, that to me would be sort of a really great opportunity to get in. But it has to make that happen. A bullish crossover in the MACD plus price action above the 20 MA, 20 crossing above the 50, those factors, like I'm saying, to me would be really, really bullish indicators that maybe there's a true something that looks more like a true trend reversal coming. But this is just to say, don't lose sight of where we actually sit in the vast scheme of things. Dangerously close to sort of SPAC IPO offering price. So just keep that in mind. But we'll see what happens here in the coming days. The RSI inching up toward the midline. Now it has a lot of room to go, but the MACD moving up nicely here, even if we do get the bearish crossover. If that's relatively abrupt, then this will be looking, still pretty solid. And then I would be sort of looking at the RSI and reliant on that to put in a pattern similar to this. When we saw this 12.5% run up, that was assisted by that bullish crossover on the MACD as well. So kind of just reiterating a bunch of things that we've already been talking about. But we'll see if it can hold this price zone where it's pinned itself to at the moment. We will see. Now, on the sort of other end of the spectrum with the data side of things, a few interesting points. Utilization jumping up quite a bit. So now the shorts have come in. They're utilizing a little over 22% of the available shares to loan, and that's a meaningful increase. We're getting very, very close to 10% of the float being shorted. So 10% has always been an important number to me. That's when I really start to pay attention to the short interest. And again, keep in mind, I think I had said this yesterday, but to me, it's a double-edged sword. People have gotten this strong vitriol these days about fighting shorts and affecting a short squeeze. It is very, very hard to affect a short squeeze. There are many more ways for short sellers to get out of their positions without squeezing than it is for retail to actually come in and effectively have a short squeeze play out. So just keep in mind the effect that will likely have is this distorted perception of selling pressure in SoFi, and that could be layered on top of organic selling pressure, which is a bunch of what this has been, right, from the lockup expiring, and then the most recent lockup also expiring, clearly adding additional pressure. So the degree to which short sellers coming in adds to that selling pressure that already exists, that could just be a hard thing to fight. So just make smart decisions on whether or not you really want to get into a battle if and when the short interest does get into the double digits. But we'll keep an eye on it from day to day. And this is just to say, decide for yourself where it is that you want to be in that fight, and make smart decisions based on the information that you have. You all probably know this at this point, but there was this document that came out, the Form 4. Anthony Noto purchased 7,150 shares. He acquired them at an average price of $13.78. Amount of securities, 2,210,102. And so, for whatever it's worth, that I think is generally taken as a bullish sign that he's come in and bought so many additional shares. But we'll see. Maybe there's a bank charter coming down the line, and that will sort of make a lot of these things. Maybe that will change the game. You don't know. I mean, I don't even know if they get the bank charter, if it will really be the relief valve that a lot of people think it will be. Time will tell, of course. But there's that bit of news sitting out there, and then also from a macro impact perspective, the Federal Reserve, the minutes came out, and they're showing that they're preparing to taper this year. And so the degree to which this places some downward pressure in the market because folks start to worry about the effects of that, the impact of that reduction in Federal Reserve purchases, that could definitely impact just individual stocks as well. So keep that in mind, layer that on top of the fear and the worries around Delta and any of the other various concerns that folks have. A lot of folks concerned, like we talked about yesterday, that the overall market is just kind of topped out and overextended. So just keep in mind that you're sitting in this little bubble in SoFi where it feels like it's been beaten down so much and you're constantly kind of looking for a floor. But just remember that the overall markets, for example, the QQQ here, which tracks the NASDAQ, you see this coming down here on the MACD. So this on the daily, this has been in a sustained upward trend, right? Very like highs upon highs. And so just keep in mind that you're overall sort of under that umbrella. So the degree to which there is a larger peel back, that does often trickle down into individual stocks, which if you've been in this for a while, or maybe even just for a year or 18 months, you would be well aware of the impact that some of these larger market forces can have on each and every individual stock along the way. So just some things to keep in mind. I don't want to rain on anyone's parade, but I think it's good to keep some perspective as best you can, and not over risk, not over leverage, and not get into positions where you're taking any slight bit of good news and amplifying it because you feel like the news has been so destructive for so long. I understand it, but I would just say be cautious with that, and don't lose sight of your own risk profile and your risk tolerance level, and keep those protocol that you have for yourself in play, and don't over risk. All right, this is me being a dad, and and having to constantly remind children to not do ridiculously dangerous things all day, every day. So it's bleeding over into this video, but so it goes. But, all in all, congrats on a green day. You've definitely earned it. Doesn't mean that there's not more pain to be felt. This doesn't mean that this has been the floor. We'll see what this puts together in the coming days. Oh, I did quickly want to take a look at Max Pain update. So Max Pain is now at $15. As one of the commenters mentioned last night, this is a shifting number, so keep that in mind. And then also a commenter, said just scroll down. You can see the Max Pain historical data below. So here we go. So I know we had looked at a couple of dates previously, and let's just look at Fridays because these are the days that the contracts expire. So we look starting on like June 4th. We'll see how these typically kind of play out. So June 4th, you have, we must be on SPY or something here. And let's see what's happening. Search by SoFi. Go to SoFi. Okay. Okay, here we go. This looks different now for some reason. I don't know. Anyway, June 4th. Okay, June 11th. We'll start there. 22.44 was the stock price. Max Pain 22. So pretty solid. The 18th, 22.73 and 22.50. Pretty solid. So you see, obviously they're keeping close there, but just make sure I have my dates correct. 11, 18, 25, okay. 25th, so we start to get quite a bit further apart here. 1891 stock price, 22.50 Max Pain strike. So that's quite a bit off. And then we go to July 2nd. July 2nd, here we go. 1819, 1950, okay. Closer, but still feels kind of far off to me. On the 9th, 1662, 1750. Okay, so you're missing all the 17s there. So, I mean, you could take a look at this and see this is free. To look at the dates further back than a month, you do have to put in your email and create an account, but it doesn't cost anything to create that account, so you can make it for free. You can see I'm on a free plan, and you can just go through and look for yourself. But I mean, Max Pain is a theory. Obviously, if everyone knew where the stock price was going to be on any given Friday based on the fluctuating Max Pain, especially as you get closer to the dates, if you really knew that it was going to have a big rise or a big fall with just a couple of days left, assuming that this can't shift that much from this point on, being that there's only 2 market days left and those expire on Friday, then that would be sort of like the world's best kept secret. So go through and look for yourself and see the degree to which you think that this is being pinned to any particular strike on any particular date. But that's there for you. And again, just addressing that because a bunch of folks have brought it up. Like I had said, I've been getting messages and emails and comments and so on and so forth about Max Pain. So it's become a very popular topic, which is cool. I think it's fine that people sort of find different things to focus in on, and and sort of theorize about. But human nature. All right, well, that was quite the detour at the end when I thought I was wrapping up the video. You got to see me fumble around with swaggy stocks and, try to use technology. So, all right, well, I hope you all had a good trading day and that your week is going well, and I hope that you finish it off strong in the days ahead. I'll be interested to see if there's more pain coming on the back of this green day, which we, like I said, have certainly encountered many, many times in the past. Point out a few of those here. Or if this starts to stabilize in any way, shape, or form, then obviously we'll keep track of that too. But we have a lot of days ahead to see what's really going to play out in a more macro environment, such is the daily chart. All right, well, I really appreciate you watching, and I will see you in the next video.